Okay, hello everybody, and welcome back to another video from the Investor Diary. Now, this is my third take because I have been blabbing and talking a lot and explaining a lot. I've been exceeding the 20 minutes allowed for twice now. Let me try to make it right this time. Um, Today we are going to talk about the EURUSD, and I took two trades during this week. Uh, One that won and the other one lost, which is today. Today it lost. Beginning of the week it won. So let's see what happened. Okay. Now for those who are following my diary, they know that I've been searching for a trading plan for a very long time, trying different tools, different ways, different schools. Now my diary is going to change. This today actually is a pivotal moment in the life of this diary, because from now on I'm going to do a recap every Wednesday, because for now I am settled on using the market structure and the SMC elements as my trading plan. Now the details of the analysis I'm kind of set on, the execution 80% set on. So let's go. um, we are going to start as I do. I start with the 6 month with my analysis, and then I move down every day. Okay, because I forget, not because of anything. Today I would study it. Tomorrow I would forget what I studied. So I start again from the 6 months. So the 6 month, it's an upward going structure. We have the low of the range, the high of the range here. The inducement has been hit, and the order block of the 6 month has been hit and made a reaction. Therefore, my assumption is that the price is going up now based on this. So the 6 month is telling us, the price is telling me that the price is going up. This is my assumption. The way I understand Forex, and the way everybody talks about Forex, that it's a game of probabilities. So this is the game I'm playing. So when I say my assumption is, so I'm leaning on one probability. The price can go in any direction. Okay, therefore I must make an assumption. And my assumption for the 6 month is that, for the moment, is that it's going up. On the weekly, we have, after this reaction here, which is here, we have the low, and we have, this is the newest structure going up. Let's zoom in on that. And that was made on from a reaction from it's the weekly order flow. It made a break of structure touching this and broke its structure and created a new one with this low and this high. I need to forget about this one. This one, it's not me. You know, many of you know that I'm learning this stuff from somebody else. I'm watching his videos and I'm learning a lot from him, and all the credit actually goes to him. But I'm not copy. I'm not literally copying. I'm making some changes, some tweaks that would suit my style, suit my schedule, suit my taste, let's say. Okay, so we have an inducement. It took the inducement, and talking about the inducement, please, if I'm going, not if, I am going fast, because I'm not here, I'm not giving an education, because I cannot give education. I cannot say how things are going. All what I'm saying is that what I have learned and how I'm applying what I learned. I cannot tell anybody, because I am not an expert. I've been always saying I've been doing this for years now on demo, and I will not move to live, to a live account until I am sure of consistent profits, and that's what I'm doing. So anyway, if you have any questions regarding how this range has been drawn, why is it there, how is this inducement decided on that it's in this location, please ask me the question, and I will be more than happy to answer it, not only in text, but also if I found the opportunity, I will talk about it in one of the coming videos after the question. So please do not hesitate to ask me any questions. I will answer you with all the detail that I can. Okay, so let's move on. So this is the low of the weekly. This is the high of the weekly. Yes, the weekly. And it took the inducement, and this is another reason why I'm thinking, because it took the inducement and it went up. So this is an upward reaction again, confirming the assumption that I made on the 6 month. Moving forward, so we have the weekly, we transfer it to this side, and we get the 4 hour on this side. Now on the 4 hour newest structure after this, okay, so we have this structure here, the low, which is after the reaction from the 4 hour order flow. The inducement has been taken, but there was a slight reaction, but price went down. So now we are looking at a price that is heading toward other liquidity areas and other POIs on the chart or on the trading range. So our next target is the engineering liquidity. Therefore, now starting from the 4 hour, yes, the higher time frames are saying we are going up, but now we are still going up, but the price seems to be, it needs more liquidity so as to keep going up. But not but so the next target for it to get liquidity is the engineering liquidity. Therefore the price now is going down, so we are against structure. Okay, so let's on the this is on the 4 hour. I hope I did this. This is counter, this is not PT, this is counter trend, but let's see why I did that. It's counter trend, but based on this it's a counter trend. But let's continue the discussion before I make any changes, because PT is pro trend, CT is counter trend. So I consider this as pro trend, and let's see if this is correct. So this is the 4 hour. Now this is the 15 minute. Now the price is going down, the structure is going up, but the price is going down to get liquidity. So based on that, we drew the structure from this reaction, from this movement, and this is very important, so as not to stay very long on each time frame analyzing it. What I do is I devise two questions, I answer them and move to the next time frame. Is the price moving towards a POI? Yes, no. Is the price reacting from a POI? Yes, no. If the answer is no, I might move to the lower to see if there is an independent movement, or if I want to make an assumption on the higher one, and from that assumption to move forward to the lower time frames. But the right thing to do, and this is what I'm telling myself now, the right thing to do, if the answer is no to both, then I need to stop at this time frame and move to another pair. There is nothing to be done here. Okay. So now, based on this, I drew structure, and this was the last structure for the 15 minute. And this is the high of the range, this is the low of the range. Inducement has been hit and the price went up. Pending order was put here, although my plan is to, now on execution, I use the Fibonacci from the top of the range to the low of the range, and I put it exactly the same. I will not waste the time now to correct it though. Why not? Let's waste the time and correct it. I want to show you exactly what I'm doing, and I want to show myself exactly what I'm doing. So it's 17633 on the high, it's 9, it's 689. 689. Yes? No, sorry. It is 1669.1, 1669.1. Okay, so now what I do normally is that I take the Fibonacci 786, and from there I put the POI and the pending order. I stretch the stop loss to the edge, to the high of the range in this case, to the external, liquid. It's called external liquidity as well. So in this case, it's the high of the range. If it is a buy, it will be the low of the range. So it will be the distance from this point to that point. This is the SL. And then I would stretch a fixed 1 to 3 RRR. Okay. So if I'm on the 4 hour, or if I'm on the 6 month and I have 3,000 points, or I have only 10 points on the 1 minute, my stop loss and my RRR are going to give me the same result. On a 1,000, I will risk 1%, so I will risk only $10, and I will gain approximately $30. Okay, and I will tell you now why I said approximately. So this is it. That's my risk management, and that's if of course on the 6,000 points, or on the 6 month time frame, I will not be able to take a trade because I cannot afford it. So the stop loss distance is one that I cannot afford. So if I cannot afford the stop loss distance, I don't take the trade. Okay, so now on this one, I think I wanted the trade to finish early, not to stretch it further down. And this is not right. I should stick to my plan, put the POI here, put the SL here, and then move 1 to 3. This is it. Now the other thing why I said approximately $30, because now I'm managing the trade, so I'm selling third of it on the third of the distance. The second third, I'm selling it on the second third of the distance, etc., etc. So what I'm gaining is 2%, which is 1 to 2. The actual result is 1 to 2 because of this management. So the RRR is 3, but the actual result is 1 to 2 because of this management. I'm still rethinking about that. Maybe I will not continue with this management, because actually this happened with all this. It happened only once. I either lose or win all the TP3s are fulfilled, uh, but only one needed management, and it stopped at the TP1. The stop loss, I was able to move it to the TP1, and it got stopped there. One out of 1, 2, 3, 4, 5, 6, 7, 8. I don't know if it was worth the risk, because I'm losing in the winning trades because of that. I'm not sure yet. I think I need more information to tell me how many trades I'm actually saving, and they needed saving to justify this move. So with this is again, this is what happened. This is where the POI, the price got it, and the price went down, and it was a profit based on the fact that the 4 hour, I call it the H4, the 4 hour time frame, the price, the assumption is that the price is going down to get uh, liquidity. The first target is the engineering liquidity, and based on this assumption, I said the price is going down, and this is a downward going structure, and this is how I took the trade. And I take trades based on the Fibonacci 786 and the RRR 1 to 3. So moving forward from the 15, we go to the 5, and this is what happened today. So when I saw this, I saw a similar thing. And therefore, when I saw a similar thing, I didn't study it. I moved directly to the one. I said, let's see if we can get a quick trade, or a range that would actually give us something. I did, and I lost. So I went here. The distance here, the SL distance is 3.1, so it's ridiculously low. The price went in my direction, but the trade, I lost 1% today. Uh, Now, if I want to study the 5 minute and this structure, look at where the price is. This is where it hit. Okay, this is where the structure is. So if I want to start, this is where it started. Okay, so it took the POI here. So if the POI, let me put that POI and give it and put it on the 50, on the 5, and let's see where it would be. So it would be here, and this would be the structure. This would be the high, this would be the low. Again, even on the 5 minute, it would have lost, because it would have it broke the structure. So once it broke the structure, that's it. The trade is lost as well. So even if I did that on the 5 minute, I will still get the same result. So this is part of trading. So now I am with 4 to 4 win to loss ratio, 1 to 1, meaning 1 to 1. This is my win loss ratio. I am 2%, 2.5% up. But this week I am only 0.5% up. Okay, I got this, I won this, and I lost this. So the final one is 0.53 or 0.52. Anyway, so 0.5% up this week. So those are very modest, but at least I'm not losing until now. Those are very modest numbers. And but the justification is that, if you can see, uh, I am doing better in choosing, the number of trades are getting better. Okay. Um, and the way I'm taking the trades. Now, because of this, I think this needs to change, because this is a counter trend and it is based on the 4 hour. And this is the GBP. This is also a counter trend based on the 4 hour. No. Yes, it is based on the 4 hour assumption. It's all of them are based on the 4 hour assumption, which is saying that the price is going to catch a liquidity here. Okay, that's it. This is the EURUSD structure. This is what I did this week with it, and this is what happened, and this is how I'm using this methodology. I hope this was useful to you as it was to me, and see you next week with another recap, maybe another pair. We don't know. Let's see what will happen between tomorrow and next week. See you later. Bye bye.